What is new in 2011 that our viewers might be aware of that they still have time to take advantage of?
One of the big problems with one of the big situations that came up was late in 2010 was when President Obama signed the new legislation December 17th on 2010. And one of the issues with signing something so late in the year, it's hard to do any tax planning for 2010. A lot of what is in place was extended, but it's hard to go back and redo anything really. But what came out of that was extension of the 2 George Bush tax credits. And I won't get into the acronyms because the letters just go on forever, it seems, but they were extended for 2 additional years. And there were some really big things that weren't changed. The biggest of which was probably the income tax rates themselves. As we stand right now, we have a 0% tax rate for taxpayers, 15, 25, 28, 31, and 36, I believe. That 36% plateau was actually going to go back up to the Reagan years at 39.6. And they were going to get rid of the 0% rate and have the first rate be 15%. So you can see how much of an impact that would have had on especially the lower income families,
Sure.
which has been such a focal point of the government these days, is trying not to affect that group. At the state level, you can see that just yesterday they had some polls about the millionaire tax, and you hear about that all the time at New York State. And the definition of millionaire in New York State is you make over $200,000. I haven't really figured out how they get to that number yet, but the tax rate being what it is, at close to 8-9%. I mean, that's, if you pay federal at 40 and state at close to 10, 50% of your income is being taxed. So some extensions like that were very needed. I think that it's great that they have another 2 years to plan. Another big one with the focus on investing in domestic companies, they left the qualified dividend rate at 15%. There was some thoughts that they were going to tax that now at ordinary income rates. So instead of 15%, if you were in the highest bracket and it went to 39.6, you're talking almost a 25% increase in tax on your dividend, GE, things of that nature. So I think they really saw the writing on the wall with the fact that this could really impact investors' decisions, things of that nature. And then the other big one was the capital gains. When you sell stock and you have a long-term capital gain, you've held it over 365 days, you get a preferential rate of 15% as well. They were thinking about increasing that to 20%. And being like I said, the legislation was passed so late in the year, there was actually a Google executive who sold, I think, 3 commas worth of stock to maybe save 5%, and then as it got extended, obviously there wasn't any change, but there was people really jumping the gun to maybe save that 5% because we just didn't know what was going to happen.
Let's start with New York State. April 18th isn't that far away. It's creeping up on all of us. What should one think about or be aware of as they're filing their New York State tax return?
For in general purposes, if you have Schedule A, if you own a home, basically, when you take deductions like real estate taxes, interest expense, or charitable contributions, they go on Schedule A. The IRS has not released their final forms, let's say, yet. So I would say hold off filing your return until probably February 18th, 19th.
You're talking federal?
Federal and federal
and state
and state. They usually go hand in hand, so I would just say to wait, just so the IRS can get all their things approved and then finalized. And if you can e-file your return, it really speeds up the process almost 2 weeks. And if you're going to e-file, is to think about using the direct deposit method of e-filing, in the sense that tax preparer, if you're using one of these special softwares, tax softwares that are out there, you just input your checking account and have your refund go right to your bank, and that really does speed up the process. It also avoids maybe it going to the wrong spot or the check being lost, things like that. Another feature that unfortunately some people do have to pay still. Another feature.
You think?
Yeah, I know. Somehow we have to get the state and the federal government on a budget balance, so some people do have to pay. And one of the neat features is the auto deduct, and people don't like paying through this as much as I think they should, but it's a great feature to get your tax return done right now, let's say, or next week or early March. Have it submitted, and then you set it up so that they can't take their money out until April 15th. So you can forget about it. It's done. Like, it'll just come out automatically. You'll get a notification that says it was, and you don't have to worry about, oh my God, I'm on vacation and I have to write a check and the checkbook's home, or whatever it may be. Because people want to forget about these things instantaneously. They want to be done with taxes. Done.
Not me. I'm too afraid.
Yeah, right. But they want, when they sign that off and they put it in the mail, that's it. And if you want to do the payment later or time it where you'll have money in your account or whatever it may be, it's a good feature to think about. And for New York State purposes, I don't see any tax-friendly laws coming out anytime soon.
So there's nothing special in 2011 in New York State, or there's not some little secret thing in New York State that you feel people don't know about?
Yeah, right now I would say it's tough. One of the things that we always try and do is it may be beneficial for people who might be paying estimated tax payments because they have a business on the side,
right,
or whatever it may be, to prepay that New York State payment, that fourth quarter payment in December, so you can deduct it on the federal return. We do a lot of tax planning with regards to that, but unfortunately, so many people in New York are in alternative minimum tax, AMT, that it's not a benefit.
We'll explain what that is.
So AMT is this great tax that has been around now for a while. I want to say late 60s, early 70s, where the government thought, they literally put this in place to get maybe 10 taxpayers. They wanted to get more money from about 10 people. And then it continued to grow and continued to grow. And every year there's this AMT patch that everybody talks about. And it really has to do with an additional tax on top of your regular taxable income. The reason why a lot of people in New York are subject to it is that one of the add backs for AMT purposes are your New York State, are your taxes paid to your state and your real estate taxes. So New York State being the highest income tax, or if not one of two, and then definitely one of the higher property tax states in the union. The combination of those two, they go back to your regular income, and then that's how they determine your AMT tax. So basically, those taxes aren't deductible for AMT purposes. So it's just getting more and more New Yorkers in AMT situations, which is unfortunate because it was originally there for 10 taxpayers, and now I can't remember the number, but it's just a lot more than you would imagine. So, but some of the things that came out of the legislation in December, some of the changes.
Now you're talking federal, right?
Federal.
Before we go,
sorry.
I just want to be sure we've covered everything about New York State.
Yeah, New York State, there hasn't really been too many changes. They usually end up just following the Fed's lead. There are some uniqueness with regards to if you own your own business with regards to depreciation. There's some accelerated depreciation methods that the Fed allows that New York State doesn't allow.
Now you're talking about small businesses? Small businesses,
yeah. If you own your own business and you're a sole proprietor, you have a Schedule C on your 1040, and obviously that passes through to your New York State return. And if you were to buy equipment in 2010, there are some things that are allowed at the federal level to maybe deduct all that in 1 year, where on the state level there is not. It's called bonus depreciation.
Okay.
The state has decoupled from the federal's action, and so you would have to add that expense back to your state income and pay tax at the state level on it. So there's some uniqueness to New York State, but a lot of it really flows through. You do, on New York State, hasn't changed. Your Social Security is not taxed. If you are a New York State employee, your pension is tax-free, which is always causing an uproar. If you have a regular pension, the first $20,000 of it is tax-free. These are all on the norms. Every situation is very specific, but in the normal process. So any New York State taxable income, for tax-exempt purposes, if it's New York State, it's tax-free. So there are some things that are a little bit different from the Fed, but the majority of the time, it's pretty much whatever the Fed is, kind of walks right through to the state return. Okay, now moving on, I just want to do New York State first because we do have viewers in Western Vermont and Western Massachusetts. Now getting on to the federal. Is there anything new in 2011 that
someone could take advantage of when they file their 2010 taxes?
Yeah, so we talked about the rates a little bit,
right?
And them staying the same. Some of the things that are new are the energy, the home efficiency energy products. They're back, but they're done as of 12/31/2010. The trick is, and if I can just start with something.
What do you mean they're done? Like if you make a purchase this year?
Yeah, if you made a purchase to install windows, so you purchased them in December, let's say, but you didn't actually put them in your house until January 15th, let's say, you've missed the December 31st deadline. They have to be bought and paid for and installed by December 31st. So that credit is now no longer as of 12/31/2010.
Gee, thank you for telling me that, because we bought an energy efficient stove in November. Okay.
You got it in? Good. Okay.
Right. Well, but these are little things like this that the average person doesn't think about. And this is your world, and I appreciate you sharing it with us.
And I'll tell you, the other thing that really bugs me is the commercials. And I'm not saying this company, but please don't take tax advice from Home Depot. Please don't take tax advice from Lowe's. They say there's this great refundable credit out there for $1,500. You know, there's great tax credit for $1,500, and I know people who have gone out and spent that extra money to get that money back. But it's a non-refundable credit. So what it means is it can take your tax to zero, but you're not going to get anything over and above that. So just be careful when you're hearing these things out there. But getting back to the energy credit itself, it is now a carrying threshold, I guess is the best way to say it. So if you took $700 of that $1,500 back in 2005 as a credit, you only have $800 left to use in 2010. So you have a $1,500 lifetime credit. So if you've used $1,500 in 2005 and you still hear all the commercials and all this stuff that it expires, you're not applicable. You cannot use the credit.
Now, it's still time, I believe, through April 15th, if you have an IRA account, that you can make a contribution to the IRA account, which will be tax deductible, or a portion of it is?
Everybody is allowed to make a contribution to an IRA. The difference that comes into play as to whether or not it becomes deductible to the person. And there's many rules that go into play, many thresholds of adjusted gross income levels, and whether you're married or single or head of household, whatever it may be. So anybody can put in money to an IRA. It's just whether or not it's deductible. You have until the filing deadline to fund your IRA. And especially on small businesses, if you have income, there's self-employed plans and SEPs and things of that nature that you can really change your business income depending on how much you want to fund your retirement plan. So it's a great vehicle. So at the end of the year, when all the numbers are known and all the facts are known, to really figure out what kind of retirement plan you want to do.
Now, are there any other little things, like you mentioned energy, we talked about IRAs, that people should be looking for as they prepare their 2010 taxes that you could share with our viewers?
Well, first, one of the ones that still gets a lot of publicity is the alternative vehicles, the energy efficient vehicles, the Prius, all these types of cars. A lot of these cars, especially the Prius and the other one slips my mind right now, some of these, the IRS has determined when they first started this program that after a certain amount of these cars were sold, those certain cars would no longer be available for the credit. So if you're thinking about buying a Prius, the Prius is definitely one of these cars that they've sold too many, so the credit's no longer. So just be careful, again, not to fall in love with these commercials that are out there that say, hey, come buy this car and you'll get a credit. Do some research. The IRS has a great website about different tools and what's still available, what's not available, the irs.gov. It's a great website to go to and do a little homework before maybe jumping into some of these big purchases.
What is your biggest warning to someone preparing their 2010 state and federal taxes?
If you're preparing it on your own, my biggest warning is to really take your time and do your homework. And what we see a lot of is people will sell stock and they'll forget to report it. They'll forget to report bank interest, things of that nature.
Usually you receive
1099 or some statement.
And you still forget?
Yeah, you'd be surprised. So So it's just stuff like that when you're under the gun and you know that and I'm going to say April 15th, don't wait until the 18th to do it, please. I'm going to say April 15th, when that pressure is mounting and life is happening all around you and you really have to set up some time to do these returns, it's really tough to think about these things when you're kind of doing your own work.